Well, markets ended higher today as buying in the second half of the session pushed the benchmark indices higher in trade. The BSE Sensex was able to extend its rally for the 8th straight session, while the Nifty 50 managed to settle above the 20,000 mark for the very first time. However, traders were awaiting the U.S. inflation data, which could set the direction for rate hikes in the United States of America. Remember, the Sensex gained 246 points to settle the day at 67,467, while NSE's Nifty 50 also gained about 77 points to close the day at 20,070. The top Nifty gainers in trade today were Coal India, Grasim, Tata Consumers, Airtel and Titan, while the top laggards in session were HDFC Life, M&M, Adani Ports, L&T and also Cipla. A day after the mid and the small cap stocks recorded their biggest fall this year, investors are wondering if the party for the broader markets is indeed over. Earlier in the day, I spoke to market expert Hemang Chani to find out whether it is now time for investors to start booking profits in the mid and small cap stocks and shifting funds to large caps. What would you suggest investors to do at this point in time? Is it time to perhaps look at booking profits out and perhaps deploying money afresh in the large caps which have not had a run up yet and perhaps may have a better chance of participating better in the next leg of the rally in the markets?
Yes, in terms of putting fresh money, I think it would be more sensible and prudent to go with large caps versus mid caps. That's number one. Number two, when it comes to mid-cap, there are too many stocks. Typically you will have top 200, top 500. So you need to do a little bit of filter check or some sort of groundwork in terms of what stocks do we really want to go in for, because the index will not give you a true picture. You need to dive deeper into the stocks and valuations, etc. So I think at any point you will have some good, interesting mid-cap and small-cap stocks to look at.
Okay. So which pockets, according to you, are still a safer bet in the mid-cap, small caps if people want to still invest money there? And where should you absolutely stay away from in the mid and small caps now?
I feel that, the PSU and that railway defense and, similar kind of stocks is where there is clearly a case of some sort of a stretch valuation. So I would not be comfortable putting fresh money over there. And if I have to put some new money, I would, at a correction, of course, I would look for either some of the mid-cap companies in the cement space. I would look at some of the IT mid-cap names. Also, maybe we can look at some of the paper and sugar companies where, again, the correction has been sharp, but the valuations are not stretched.